Remember, the government hiked import duties on gold and silver from 6% to 15% last week. Well, India has now tightened the screws even more on silver imports. A major policy move aimed at plugging loopholes and controlling inflows to the white metal has been notified by the government. Now, will this protect the Indian economy from rising external pressures? Let's figure out. First, here's exactly what happened. Well, the Directorate General of Foreign Trade, or DGFT, has changed the import status of multiple silver categories from free to restricted. Now, in simple terms, silver can no longer be imported freely into the country, and importers now need government approvals or licenses. The rule has taken effect immediately. Now, the restrictions cover silver bars, unwrought silver, semi-manufactured silver, silver powder, and certain silver alloys plated with gold or platinum. The biggest impact is on high-purity silver bars, especially the 99.9% purity bars, which account for the bulk of India's silver imports. Now, as I told you, the crackdown comes immediately after the government raised import duties on gold and silver from 6 to 15% last week. Officials feared that traders could in fact exploit loopholes that existed by importing the precious metals from UAE, where India has a free trade agreement to bring in silver at lower effective tax rates. Now, that would have defeated the very purpose of the duty hike. But now the government has added the license element to make silver imports tedious as well as expensive. Now, obviously, the government is worried that unchecked bullion inflows can widen India's trade deficit, further drain foreign exchange reserves, add more pressure on the Indian rupee, and increase speculative activity in precious metals. And remember, this is coming in the wake of silver prices seeing a record rally in 2025, primarily for its use in emerging technologies like solar panels, semiconductors, as well as industrial use. Now, Indians bought silver in hordes, hoping to ride the price appreciation wave. Just look at the data. India imported a record $12 billion worth of silver in FY26. And in the month of April 2026, imports reportedly jumped as much as 157% year-on-year. Now, that spike raised concerns in New Delhi that silver was increasingly being used not just for industrial demand, but also for investment as well as speculative trading. Now, historically, Indians have bought silver for a wide variety of uses, including, of course, for jewelry, utensils, as well as religious or ceremonial items. But the challenge is that India produces very little silver domestically. More than 80% of India's silver demand is met through imports, making the country heavily dependent on global supply. Now, this means any surge in imports directly affects India's foreign exchange outflows. So what exactly is the end game here? Why is the government restricting silver imports, and what does it want to really achieve? Well, the main goal right now is economic stability. Remember, India is facing multiple external pressures with the war in West Asia. High crude oil prices owing to the blockade of the Strait of Hormuz is adding enormous pressure to the Indian rupee. So the government wants to protect as much of selling Indian rupees to buy US dollars as possible, because US dollars is what you need to buy oil, gold, or even silver for that matter. So by restricting non-essential metal imports, the government hopes to reduce unnecessary dollar outflow, also narrow the current account deficit, and in this case specifically prevent misuse of low-duty trade routes like the one with UAE. Now, the move also sends a message that India is willing to aggressively monitor and regulate precious metal imports when macroeconomic risks rise. So, will this affect your jewelry prices? Most definitely, yes. The restrictions will tighten silver supply in the domestic market and hence raise local silver premiums. Now, this will increase input costs for jewelers and push up prices for consumers like you and me. Now, industries depend on silver, especially gems and jewelry exporters may also face higher compliance requirements and tighter oversight. Now, this is not just about silver. The story holds true for gold as well. India wants to regain tighter control over bullion inflows at a time of global uncertainty. The crackdown suggests New Delhi is entering a more protectionist and tightly monitored phase when it comes to precious metal trade. Remember the term License Raj from the 1980s and early 1990s? well, we might be traveling back in time just a little bit as far as import restrictions for precious metals go. The question is, will the licenses end with silver?